Time now for a look at today's business news with France 24's Cole Stangler, who's with me here in the studio. And Cole, you're starting with Evergrande, the embattled Chinese real estate developer.
That's right, Thomas. It's taken a big step, actually, to avoid defaulting, Evergrande, that is. Chinese media reporting it's made an overdue interest payment just a day ahead of a very key deadline. Now, that $83.5 billion payment was originally due last month, but came with a month-long grace period that expires Saturday. Evergrande is the world's most indebted property developer, and the firm's fate is being watched closely in China. Doubts continue to linger over whether it can keep paying suppliers and investors, though investors do seem to be relieved by the latest payment. As you can see here, company shares up today, more than 3%. Fears of an imminent default then evidently off the table, at least for now. Well, next up, Australia's biggest airline hopes to ramp up flights. As the country's quarantine restrictions ease, international travel is expected to pick up in the coming months. For Qantas, that means some 11,000 crew members are slated to be back on the job in early December. They've been idled without pay as a result of the crisis.
Months is probably the darkest period in Qantas's 100-year history. It's meant that we've had to ground aircraft, stand down people and restructure the business. But there is light at the end of the tunnel. It's very clear that because Australians have rolled up their sleeves and taken the jab, we can see that light. We're getting more aircraft back in the air. We're starting more international operations. And very importantly, we're getting more of our people back to work.
Let's take a look at some of the day's trading action. A mixed bag on the major Asian indexes so far. Investors reacting to Evergrande making that debt payment. So you can see here the Nikkei and the Hang Seng leading the pack that shares in the red in Shanghai, and also on the Kospi being sold down over 0.1% there. Now to Afghanistan, where nearly 97% of households could be living below the poverty line by next year. It's according to the United Nations, which has also set up a special fund to allow states to support relief programs on the ground. Lauren Perstecker has the details.
A trust fund to help prop up Afghanistan's crumbling economy. The UN says it intends to channel over $660 million to various local programs and businesses in order to keep the country going for at least a year. Since the Taliban took over in August, Afghan banks have been running out of cash, food prices have skyrocketed, and unemployment has spiked, sparking fears of a complete economic collapse, which could plunge millions into poverty.
97% of households in Afghanistan could be below the poverty line by early to mid-2022, 97%. We have to step in, we have to stabilize a people's economy, and in addition to saving lives in the immediate, we also have to save livelihoods.
The UN plans to channel the money via 3 specific routes: sending cash for public work programs, giving individual grants to small businesses to keep them afloat, and providing a temporary basic income to the most vulnerable segments of the population. A way to avoid directly sending money to the Taliban-controlled government.
Channels funding directly to community groups, to community members. It will provide a cash for work to support small public works efforts.
The initiative is expected to reach around 4.5 million Afghans over the next 12 months. If successful, it could be repeated next year, and its scope potentially doubled, depending on whether the UN can secure enough funding.
Well, next up, U.S. financial regulators need to improve the oversight of risks due to climate change. That's the takeaway from the Financial Stability Oversight Council, a group that includes the head of the Treasury and chairman of the Fed. They say climate change is already imposing heavy costs on the economy, from wildfires and storms to droughts and rising sea levels. The report calls on improving data collection and beefing up the disclosure of climate-related risks. It comes just over a week before the UN's climate summit in Glasgow. And finally, what's good for privacy advocates isn't necessarily good for Snapchat. The app's parent company reported lower than expected second quarter earnings, something it pinned largely on new privacy rules for iPhones. Apple's new policy blocks online tracking unless users give their explicit consent, making it harder for apps to sell ads based on data they collect. Shares for Snap will have lost more than 20% so far in after-hours trading, wiping out billions in shareholder wealth. Thomas, we'll see how things fare today, but already you have a lot of investors wondering whether other firms could see similar effects over this new Apple privacy policy.
Latest business news. Thank you very much.